Hello everyone, Marnel Garcon here with Meadowbrook Financial Mortgage Bankers, and I wanted to take the time and speak to you today regarding student loans and how we as mortgage loan officers factor that into your debt to income ratio. So first and foremost, when it comes to student loans, there's typically three repayment plans that you have with a student loan. You have the standard repayment plan, which is, they give you a monthly payment and that's your monthly payment throughout the whole term. You have an income-based repayment plan where, based on your income, if you have hardship, they might reduce the monthly payment that is typically necessary for you, and that is your new monthly payment. And then you have the deferred payments where you're not making monthly payments on your student loans until the foreseeable future. So, looking at the very first one, the standard, if you have a $30,000 balance of your student loans and your payment is $500 a month, we are going to take that $500 a month and that is applied to your debt to income ratio, and that is the payment that we factor in for the foreseeable future for you. If you are in an income-based payment plan, however, and you have a $30 monthly payment of the $30,000 that is owed because of your payment, then what we look into, put simply, is just 1% of the $30,000 balance, which would be about $300 for you. So although you're making a $30 payment, we understand that that will not be the case in the future, that payment will likely be more in the future in terms of the repayment. So we are factoring in 1% of that overall balance, and that is now your new monthly payment debt factored into your debt to income ratio. For those that have deferred payments and have zero as their monthly payment until whenever they decide to start making those monthly payments, we are also going to factor in that 1% of the $30,000 for repayment, which is $300 again. So although you're deferred and you do not have to make that monthly payment, we do have to give you something in terms of a debt for that calculation. And again, it is going to be 1% of the overall balance of your student loans for repayment. There are some exceptions to the rule, and one major one is really a rarity in the industry, and that is a repayment plan where it is less than 1% of the monthly payment is the payment on there. So I'll give you an example. We're using 30,000, so let's just stick with that. Let's say you have a repayment plan that is $165 a month. However, this is fully amortized at the end of the year. Well, we can actually use that at the underwriter's discretion as a basis for your monthly payment. And if you have documentations that actually show the fully amortized loan over, let's say, a 25-year period, and it is $165, we can go with that $165. However, like I said, it's a rarity. The rule of thumb is typically 1%. So, Marnel Garcon here, Meadowbrook Financial Mortgage Bankers. If you have any further questions regarding student loan repayment or how we calculate student loans, please give me a call directly. Looking forward to speaking to you.